before Bitcoin makes a new all-time high, we gotta do this now. We gotta prepare. And I'm gonna show you guys exactly what I'm talking about right now because we know that any moment Bitcoin can break this blue line, which is the all-time high for Bitcoin. Any moment it can happen very quickly, but until then, we need to trade this structure, how it's presenting itself, how it's unfolding. We need to do things properly and not get overhyped because, as you guys know, you guys can look it up. There's so much inflows, there's so much positive news on Bitcoin right now. The hype is building up, and this can cause a lot of FOMO buying, last minute buying, even with extended prices. But here's the thing, right? We know that the Bitcoin supply and demand is very strong. We know that there is no weakness in that, and it's also reflecting in the price. So what I've been doing since the last update video is we know that Bitcoin came down and broke into our next Bitcoin accumulation area to acquire small long positions as a way to try to capture any more upside. Earlier today, as Bitcoin formed this higher low from here, I did create a little bit of an extension to personally keep an eye on Bitcoin and see how high it can stretch to know how long I really want to hold on to these small long positions, because of course the stop loss was not triggered, which is at 97,800, very far away from the stop loss being triggered. So as the price came up higher, I know that, hey, I said this many times, Bitcoin likes to dance around and flirt with this 120 moving average I have in blue quite a bit. It does it often. Usually when it overextends one way, it eventually comes back to it, dances around before overextending, dances around the 120 moving average again, and this happens very often. So I also at the same time don't want to get ahead of myself. With Bitcoin, I don't want to fall into any FOMO. I understand that the price of Bitcoin will do what it is healthy in a way where we see prices balance itself out. We see overextensions get corrected. We've seen many times, and we're seeing one right now where Bitcoin begins to consolidate to try to factor in any previous big moves that it had. And today, and this is a pretty good learning opportunity, at least from how I personally like to manage my trades, is, well, if Bitcoin comes down into a reasonable area to begin accumulating, I already told you guys I did accumulate a small long position at the moment it broke into the blue accumulation zone. And now, of course, it's like, well, when something like this happens, what's the best way to, and I'm going to get into the near future of Bitcoin in a moment. But I know that, hey, we came down. During this time, the RSI did bottom out. So far, it has not topped out just yet, but I'm going to get into a little bit more of detail on that in a moment. But I know that it did this little bit of a higher low as it came up higher. So I was wondering, like, how long do I really want to hold on to this, and when is there a good sell signal? So I basically just got this fib extension from this low to the swing high, bringing it down to the the higher low, and it gave me this area. And I thought to myself, well, if the medium section of the area overlapped with the bodies of the candles creating a resistance, regardless of the wicks being higher, I know that this may be a good area to maybe offload a portion of that position and accumulate again that portion back at another support line. So what I'm looking at right now going forward is how I personally plan to manage this trade. Instead of giving you guys a bunch of different scenarios of what can happen, I'm just going to tell you guys what I'm personally doing and what is making me want to trade the way I'm trading right now. So as of right now, we know that these fib extensions and retracements are all just measurement tools. The price does not have to act a certain way every single time, but it does give us an idea of what we want to be thinking when it comes to how these measurement tools align with the prices. So I know that I usually like to see the more extreme side, which is fib extensions max out as much as possible. I know that just like in previous structures. We've seen these areas max out quite pretty much perfectly all the time. Actually, like 8 out of 10 times for the most part. We've seen this one max out pretty well before coming down into a retracement. We've seen even imbalances get filled very well. And there's a lot, but I usually go over that every video, every structure. But what we have right now, and oops, I clicked on an ad. Okay. So how I'm approaching this right now is I know that the 120 moving average, although the price likes to trade around that area quite a bit, usually it does respect it when it comes to consolidation patterns, which right now we are consolidating a little bit sideways. So after finding very quick support down here, which is very weak, I know that, hey, it's very, very likely that the price will want to come down into this area and maybe hit that 0.5, around that 0.5 before finding another support. But the thing is, at the same time, I know that the RSI, when it came up into this area, it didn't max it out, and it doesn't have to. But I like to see the price max out the RSI either to the downside or to the upside. We've seen it pretty much perfectly max out right here. It didn't break it, but this one has a little bit of a gap. And within that gap, we know that, hey, Bitcoin came up. It broke the 1.38 extension at $104,800 basically. And it didn't want to reach the top extension, which is fine, technically speaking, when you're looking at the previous resistances, just factoring in the body of the candles within the 1 hour chart. So on top of that, it came down. So far, it's trying to hold support at the 120 moving average while the RSI is flat. What I'm doing going forward is that I am still, at this moment, holding a strong stop loss at 97.8K for the majority of the position. When it comes to smaller amounts of position to kind of sell a portion of it as it goes up and accumulate more when it comes down, I do not want to sell the short-term position unless the price reaches the 1.618 extension at $105,300. So it will just be just under that. I want to see the price come up into this, but understanding that, hey, we may have already topped. It's very, very likely that the price can finally come down, have a retracement, maybe consolidate within this area a little bit, maybe have a little bit of a bullish correction to, if the price were to come down from here. It wants to come up here to try to fill in any imbalances that are created here before it comes down into the, more important, significant retracement area that's factoring in the whole move from down here to up here. So the whole purpose of this is to not just practice and execute, risk management, but it's also a way to try to capture small fluctuations to maximize our profit as much as we can. As we know that, hey, ideally the price will be coming down before it can come up much higher, to try to, have a proper correction before we come up higher. On top of that, we want to confirm bearish momentum. So until we have bearish momentum, which is breaking below this blue area, at the moment the price breaks below this blue area, the gateway to the red retracement it opens very clearly. So we know that, hey, this is the last support before clear pathway to the red. Until we have that bearish confirmation, it's very important to understand price fluctuations, short-term price fluctuation, I should say, and what the price is telling us as of right now. So if I factor in the low right here to so far what the swing high is for this move, we know that in this area right here, I'll make that a different color, we have a very important area to look at potential supports. So with the amount of bullishness we have in the news media right now does not always indicate or does not perfectly translate into the price having to go much higher. We've seen a lot of bullishness already, so it's like, well, or is it already fading away? And if it is, where can we be most cautious at? And we know that right now it's very important not to take aggressive long positions because we are very overextended. We broke over the bullish extension area. We're starting to consolidate. We failed to make a higher high from here. So taking large long positions right now is, in my opinion, just not the wise decision to make. So it's better to take small long positions with a tight stop loss wherever that risk tolerance falls into your own trading style, but taking small long positions at proper reasonable supports. So supports being, like, for example, in my case, it will be here in this blue area, accumulating, and begin to sell off shaving portions off of that position that I accumulate within resistance areas. So as the price came up into the median area, where previous bodies of candles tend to find a top, hey, to me that very obvious that, hey, maybe I should be looking at shaving the position at that point and waiting. If the price continues to go up higher, I'll have a fraction of that position to still capture more upside. But if it comes down, at least I shaved off a portion of that position. I am not as invested as I once were when the prices were much lower, and now I'm looking to add to that position once again at the next support area. So I will continue to play around and balance out this position, as my indicators tell me to. So in this case, it would be like, hey, we were just about to top out. We couldn't reach this area, but we hit previous resistances with these bodies, candle bodies. So it was very obvious to me to start shaving the position. Now I'm looking for the RSI to bottom out once again. And in that case, it would be, we know that the 120 moving average the price tends to respect it. But during consolidation periods, we know that, hey, it's most likely to dance around it continuously until a break of structure happens. In this case, a break of structure will be either this wick all the way up here where the swing high is, or it will be a bearish break of structure. It will be at the bottom of this wick, which again, to me, it's more probable that we will be coming down and filling in this area quite well, because we do have a lot of imbalances here that can act as a magnet very easily. We've seen this happen enough times to not shy away from it, right? So now what I'm looking at the price ideally coming down into this area, trying to form a little bit of a higher low within this area, which will also bottom out the RSI. I plan to add a small amount to the position at this area in with the idea of the price breaking over the 120 slightly back into this yellow and begin to shave that position off there. So then if the price continues to come down, I can reaccumulate at deeper prices and then continue the process from there. Instead of buying high, I would rather buy when the indicators are telling me that it's an ideal low price for the short term, and so when it's at a higher price. So in this case, right, I'm looking to accumulate here. The stop loss to exit the position out completely will be down here, down here where the prices tend to bottom out. So again, I'll be out completely the moment the price breaks into this blue. Because to me, if the price has enough momentum to break into this blue, it shows me that, hey, it's most likely going to come down a few $1,000s more to try to hit the bottom area right here. And this is where I plan to then accumulate a new position and begin another small long position within this area. So I'll be continuously locking in profit and adding, shaving positions as the price dances around this area. The moment it breaks into the blue, I already plan to be complete out of the position, because I do believe that it can very easily come down into the bottom 0.618 at roughly 97.8K. If the price breaks below the blue, I do expect it to fluctuate within this area a little bit, and I'll continue to trade mostly based off the RSI. And any small support and resistances are built within the blue, because I am still very open towards the price, having a proper retracement in here before we can go much higher. This is what's, in the back of my head, is knowing that, hey, eventually, until we have a bullish break of structure, which is less probable, again, in my opinion, I do believe the price can come down to here. So that's why, again, I'm just practicing risk management, and I am taking small long positions with very strict stop losses and very strict sell lines. So I already shaved my position in this area earlier today when the stock market was open, because I am trading Bitcoin ETFs. I do not plan to add more to that position unless the price comes down into here. At the same time, the RSI bottoming out, and then as the price fluctuates and tries to, because it's very possible that at this point it can do something like this, where we have a little bit of this top forming with a descending resistance line. So then I am looking to quite simply add when the RSI has bottomed out within this area, and looking to sell the moment the price starts touching the yellow once again, because the moment the price touches the yellow once again, it's very, very close to this resistance line, which I do not want to play around with. I understand that, hey, as of right now, even though bearish momentum is not confirmed, we are showing signs of the start of bearish momentum forming, and that's, again, this swing high being lower than this one. So I'll be accumulating here when the RSI has bottomed out, in the lower 100K area, and then again selling very strictly the moment the price starts to reach this resistance area. Once again, just as a summary, I'm not going to be holding. I'll be automatically taking out a position the moment the price breaks into this blue, because I would like to conserve as much capital as possible to accumulate at the lower boundaries of the blue and trade any, consolidation fluctuations that we'll see within this area. And then again, the moment the price breaks below this support line right here in white, I'll be completely out of the position, and I'll be conserving capital to then accumulate new positions within new short-term positions, I should say, within this red area. And also for my longer-term portfolio, I would also be accumulating quite heavily within this red area. So this is where most of my large positions will begin, in adding to large positions, while these smaller short-term positions will be, constantly adding and shaving as the price fluctuates within this area right here. So that's just how I plan on managing this trade. I'll be watching this price very closely, as closely as I've been watching it for the past week, and over the past week, basically, until we continue to get break of structure confirmations, and I'll be keeping you guys updated on my views on these on this chart as the price continues to do its thing. So yeah, hope you guys enjoyed, and I'll catch you guys in the next one.